Is it time to compromise when it comes to making a property purchase? And should you sacrifice your time and your money to jump into the property market that we're in at the moment? Let's take a look at this news article and break down first home buyers and potentially investors looking to break into the market through compromise and some sacrifice in the process. Queensland first home buyers are bucking the national trend by snapping up real estate at the fastest rate in 13 years, the Real Estate Institute of Queensland says. We've definitely seen that on the ground in my buyer's agency here at Purpose Property. We buy in the Brisbane market, roughly 30 k's north or 30 k's south or on the Bayside up here in Brisbane in established pockets. And what we're seeing is multiple offers on every property we're going to. Properties are getting snapped up pre-market or at auction. There's a lot of competition out there in the market at the moment, so I'm not surprised that it's the fastest rate that houses have been selling in the last 13 years. With prices soaring through the roof at a 20-year high, savvy young buyers are settling for less just to get their foot in the door. Now, that's the whole reason I wanted to talk about this article today and take a look and a deeper dive on this topic. Is it better to settle for less? Instead of getting a nice big home on a good block, should you go for a more renovated home or a home that's further away, or maybe look at an apartment or a different style of property as well? The REIQ Chief Executive Officer said that first home buyers were buying around 3,000 homes every month in the Sunshine State. The Australian Bureau of Statistics data said a year ago the figure was down to around 2,000 a month compared to the 3,000 that we're now seeing, but sales started to outpace other states early in the new year. Now, first home buyers are really struggling in this market because the price point first home buyers buy at is typically the same as what investors are looking for. Up here in Brisbane, first home buyers typically buy around the $500,000 to say $700,000 price point. It can be more, it can be less, it just depends on the buyers. But especially at that price where they get the state deductions or stamp duty exemptions as a first home buyer up to that $500,000 mark, there's a lot of competition for freehold homes from $350,000 to $500,000. On properties that are say 25 to 30 kilometres from the CBD, we're seeing prices that were $400,000 and $350,000 a year ago, creeping up to around that $500,000 mark. Certainly what we are seeing, the market doing nationally is pretty extraordinary, and so you can understand why there is a lot of talk around affordability and that first home buyers are being shut out of the market. But I think when you look at Queensland, it's quite a different story, and the statistics tell us that actually in Queensland, when we look at first home buyer loans, they're the highest level we have seen since 2008. So it does tend to fly in the face of this argument that first home buyers are being shut out and not being active in the market. That is certainly not the case here in Queensland. Now, we definitely help people that are first home buyers through our buyer's agency, and what we've noticed is there is a lot of demand on those products in Queensland. It's not affordable as it was 12 to 18 months ago, but the other option is to have cash and not invest in the property market or in something else. And so really people are stretching their limits on their loans and finances. It's important when you're looking to make a first home purchase or an investment property purchase that you aren't stretching too far. So it's great to have an accountant, a financial planner, or somebody that you trust to look over your finances and get a different perspective to make sure that you're comfortable with the purchase you're about to make, and also run the cash flows as to what it might look like if you're buying for an investment or if you're buying for yourself and you've got to make mortgage repayments each month. Now, there's a lot of talk about the banks and what they're doing around fixed interest rates and increasing the rates in the near future. And it's important when you're an individual or a couple that you do cash flows on higher interest rates than you're currently getting at the moment. For ourselves, Emily and I like to use a 2 to 2.5% buffer to just calculate how comfortable we are with making our repayments and what the cash flows look like over the short, mid to long term for our investment and our personal mortgage as well. So let's take a look at Lizzie Delaney, who's 27. She had her heart set on a small old Queenslander, which is a great thing to have an aspiration for, but she realised that she had to downsize her expectations as prices have soared. We're seeing small Queenslanders like ours that we're in at the moment, little two-bedders in and around the CBD of Brisbane, say 5 to 15 kilometres, going for over $1 million. It's a lot of money for a little Queenslander on a small bit of land. So let's take a look at what Lizzie ended up doing with her purchase decision. So Lizzie said, "It was hard, but just something I had to do. You have to get your foot in the door at some point, so it's a good start," she said. The marketing coordinator has just gone unconditional on a 30-year-old 2-bedroom unit in Toowong in Brisbane's inner west. She'd saved up a 20% deposit and paid $450,000. I've basically been saving since I was finished school, and it was difficult, but I got there, she said. I only really looked at places that were within my budget. Otherwise, I think things could have spiraled out of control. These are some really wise words from Lizzie. So fantastic that she was able to get into the market and reset her expectations. A lot of buyers out there have unrealistic expectations is the best way to put it, around a property purchase they can make. They might be looking at data that's 12 months old. They might have their heart and let their emotions get in the way of this property purchase. And so it's great that she's reset her expectations and found a unit that's established in a good location. So she's not bought off the plan or bought a new build, and she's in a great location buying in Toowong. So kudos to her for getting into the market. And I think that's something, people need to do. Look at affordability and look at what your constraints are in terms of your purchasing power, and be realistic about what you can make for your next purchase. Now, I wouldn't always be advising to buy a unit, but if price is a factor and you're a first home buyer that you can buy a unit that needs renovation, for example, maybe you can do a cosmetic renovation on an older style flat or unit and then work your way to refinance or sell and end up buying a house down the track. Ms. Delaney said she took a gamble ditching a finance clause in her contract as there were several other bidders on the property. It was a bit of a calculated risk, but I knew I had pre-approval, she said. I'm so excited now and I'm looking forward to furniture shopping online. It is really a great place to establish myself as a real adult, I suppose, rather than an early 20s share house girl. So when it comes to pre-approvals and removing finance clauses, Brisbaneites don't usually have the same expectations that people in Sydney and Melbourne do. So it's different in each of the states. So Brisbaneites and people buying up here in Brisbane usually like to have a finance clause. It's not super common to remove it unless it's a very competitive scenario. It's more common in Sydney and Melbourne not to offer with finance in place, as lots of the houses go to auction in those locations as well. Now, we're seeing this a lot more on the ground. Lots of people are removing building and pest and finance clauses, but you need to make sure that you're comfortable with your purchasing power like Lizzie was here, to make sure that you're not going to get yourself in hot water and potentially lose your deposit. So reach out to your broker or your bank, get that pre-approval in writing, and then when it comes to using a building and pest clause, see if you can get a building and pest report prior to making your offer. If they, sometimes the agents already have those reports done, and if not, see if you could get that done. If it's an auction scenario, you definitely want to get that done prior to auction day. Or if not, you can definitely still keep that clause in place, say for 3 to 7 days is the standard up here in Brisbane, to strengthen your offer and give you a greater likelihood or a greater chance to potentially win that property and make that purchase in the end. So let's take a look at another recent buyer that's described in this article. So health worker Marie Smith, who's 45 years old, is sleeping on a mattress in the bedroom of her new home in the Ipswich suburb of Silkstone, but she could not be happier. The first home buyer found a cute cottage, a 959 square metre block with subdivision potential for $500,000 after missing out on countless other properties in Redcliffe and Brisbane. She spent the last 2 years saving 40% of her salary after her employer agreed to pay for accommodation as a local healthcare worker to help her get the deposit over the line. She says here, I ended up offering my maximum, but I did not want to mess around with $5,000 increments. I just thought I'd have to go all out and go out quick. So big kudos to Marie for sleeping on a mattress and doing everything she could to get into this property purchase. I know that might seem a bit extreme to do everything you can, but sometimes that's what it takes to get into the property that you're looking to purchase. She's obviously gone ahead and put in a very strong offer at the top of her limit. And in this scenario, she's got subdivision potential. She might be a long way from the Brisbane CBD in Ipswich, where we don't usually buy as a buyer's agent. But if this is for her own principal place of residence and she's looking to manufacture some value down the track for that subdivision potential, it sounds like potentially a fantastic purchase to set her up for the long term. So another couple of ways to get a bit of a competitive advantage for this next purchase is to look at either house hacking or rent vesting. House hacking is where you're going to move into the house and get yourself a couple of roommates. I know that Lizzie in this article was, happy to get out of a share house, but maybe make your own place a share house and have your mates pay off your mortgage with you. So you could rent out 2 other bedrooms if you've got a 3-bedroom place, and they could potentially cover your mortgage, and that will help you pay it off faster and leave more money in your pocket at the end of the day. The other option is to look at rent vesting. So maybe rent an apartment, but if you have the affordability, then buy a freehold house and land up here in Brisbane for around the $500,000 mark. You could rent a place for, say, $350 a week in a nice 1 or 2 bedroom apartment, and rent out the house for $400 a week and have other people pay off the mortgage for you. It'll allow you to get into the market and see potential capital growth in that property, and also have other people pay for that mortgage while you live within your means in a smaller dwelling that's potentially in a location you'd love to live in. And so it gives you more choices if you look at that rent vesting approach. Now, there's one key quote that I wanted to talk about to round out this video and give some key points as to how you can make considered sacrifices to help you get further in your investing or in your principal place of residence purchase. Now, the quote says, "But becoming a first home buyer involves compromise and some sacrifice." Now, let's look at compromise. You want to compromise, but not too much. When we're talking about compromise, for example, you could be looking at a suburb that's 15 kilometres from Brisbane CBD at, say, a $650,000 price point for a freehold house and land. Now, as we've seen over the last few months, prices have been creeping up. 20% growth in 12 months has been astronomical, and the market's not always going to be this way. But it's important to take a considered approach and look at if you need to take a step further out in terms of location to still get a great piece of land and a great property that has the potential for your investment or first home owner decision over the long term. Now, the other part of compromise is sacrifice, and it definitely takes sacrifices to get into the property market. The hardest part of buying a property is actually saving that first deposit. Emily and I saved for around 3 years to actually scrape together our first deposit, and it was around $66,000 to $70,000 at that point in time. It's really difficult if you're an individual as well. So say you're on only a single income, it's far more difficult than a couple that's on 2 incomes. So take that into mind and try not to compare yourself to others out there, but use a mixture of compromise and sacrifice to try and find and save up enough money to buy in a pocket and a location that you're comfortable with. The market's not always going to be this heated, so don't expect a large amount of growth over the next 6 to 12 months. There might still be some small growth based on what the economists are saying in that 5 to 10% band, but I don't think the property market can continue as it has over the last 12 months with massive waves of growth across Australia, not just in Brisbane on the ground. And we've seen that not just in the capital cities as well. The regions are doing really well in terms of growth. Now, the last part here is when you're a first home buyer or an investor looking to make your first or second property purchase, look to potentially be borderless. We focus our personal portfolio in Brisbane and our business in purpose property and buying in Brisbane, but I don't necessarily say to my clients, Brisbane is the best place for you if you've already got a lot of property in Brisbane. There's other great markets out there. There's regional locations that might be great opportunities for cash flow and potentially some growth. Adelaide seems to have a lot of talk around it, but I'm very bullish on the Brisbane market over the short, mid and long term. Being the 3rd largest major capital city, we are comfortable buying in this area. And the Sunshine Coast and Gold Coast also have some great opportunities if you're looking for more lifestyle locations. At the end of the day, you need to be researched and quick in your approach to make smart purchasing decisions, like both of these buyers have done in this article. Both of them were considered in their approach, they understood their limits, and they were quick to act. And that's what we're really seeing here on the ground. We're seeing properties come through pre-market listings and selling prior to even hitting the market. And we're also seeing properties that come to market sell within 48 hours if they're listed on a Thursday and sold on a Saturday afternoon. So make sure you have your finances in order. Do your due diligence on the property and have great terms, but also realize that you might need to compromise on your location or property type and make some sacrifices along the way to get into your next property purchase. If you could like this video so more people can see this content and have a discussion around making sacrifices as a first home buyer or an investor, that would really help me out. Subscribe to the channel as well. We're loving seeing the channel grow over time and love having a chat with you. So leave a comment down there. And if you're interested in seeing more videos on real estate, renovating or financial freedom, click this video over here and we'll see you in the next one. Peace.
you.